So guys, over the last few days, we have been blessed with some trending downside and clean continuation, and the break and retest rejection has been playing and firing on all cylinders. If you guys think back a year, year and a half, 2 years ago, when the market wasn't just going straight up every day, the break and retest rejection was the go-to. This was the trade that we were smacking over and over again. And over the last few days, it has reminded me how great looking for rejections of previous day lows and seeing that flow and downside continuation, how great catching those types of setups are. The downside typically comes in quicker than the upside. You get that panic type move to the downside. You get big breaks of key levels that cause that flow of selling. And definitely over the last few days, it has been much more lucrative to trade downside than it was trading upside a few weeks ago when we were just sort of chopping to the upside and really not giving much continuation. So if you're a trader, you should be very happy about the downside that we're getting. There has been some sexy break and retest setups. And over the last 2 days, I've been able to trade Palantir and Tesla. Both of those trades combined over $100,000 in profits. Now, I want to talk about in today's video the type of risk that I had to take to make those profits. These are big numbers that are thrown around, and I want to make sure that you know how much risk I'm taking to make these profits. It's not like I'm risking small amounts to make these profits. These are big position sizes, big setups, and I'm taking large size. And so I hope that this video serves as a, hey, am I ready for that type of profit, right? Am I really prepared to take that type of risk, right? Make it realistic about the type of risk that you have to take to make these types of profits that I'm talking about today, but also just showcase the strategy and how you can use it with smaller position sizes. You can trade the same setups that we're going to talk about today on Palantir and Tesla with smaller size, and you would have returned the same percentage point return. So number one, let's talk about the risk I took to sort of give you an idea of what you have to risk to make this type of money. But also, two, let's learn from the setups and learn from how you can trade it yourself. Hope you guys enjoyed today's video. If you do, press that like button, subscribe to the channel. Let's just jump right into it. So, today, the S&P 500, very clear downside, right? Starting the morning, we had some very clear downside. We had a break under the 59.90 level. We had a break and retest of that 59.90, and we just flowed to the downside. And you guys probably are saying, hey, Desi, what's that little thing you got on your charts there? So over the weekend, I popped into the Discord chat, and I saw some members talking about the EMA clouds. I'm sure you guys are aware of EMA clouds. And I said, you know what? That looked really good on Friday, which was the day that I tried to reverse the market, which I had no business doing. And if we're going to start getting some trending days, which we've seen, let's go ahead and throw on those EMAs again. You guys know those EMAs are powerful on trending days. Now, a lot of the reason I don't use the EMAs as of late is because we haven't really gotten many trending days. And when you trade sideways, right, let's go ahead and take a sideways example. Let's just look at this area. When you're trading sideways, EMAs are not powerful, right? They're very choppy. There's no real trend. But when you have these trending days to the downside, both yesterday, right, see how strong that trend was, and then both today, right, let's go over to today, those EMAs are powerful. I will say, when you have a trending day, they are powerful tools, right? And so today, I threw it on again, right? And you can see a beautiful sort of failure to move over that red cloud pretty much all day until we hit a very key demand down below. All right, so combining these clouds, these EMAs with our key levels, it has been a beautiful thing over the last few days. I'll go ahead and put the script down below for you guys to check out. Pretty much all it is the 9 and 21 EMA. And if the 9 EMA is underneath the 21, then you're going to get a red cloud. If the 9 EMA is over the 21, you're going to get a green cloud like you can see there. And it's actually shown some pretty key areas where the market sort of finds that strength and sort of flips back to the upside, or at least gives you an idea of where that momentum's changing by your key levels. Now, I can't stress how important it is that the levels are more important than the EMAs. You have to still focus on the key levels, but if you join them together, it has been very powerful over the last few trending days. So today, we used this on Tesla. We saw downside on the market, and we were looking at Tesla, and we were setting up a trade pretty much in the pre-market. If you guys came to the pre-market live stream, we were very focused, and I'm going to take that cloud off for a moment. We were very focused on the break and retest of $335 per share. This was a setup and idea that we were talking about before the market opened in the pre-market live stream. You guys see right here, we have that very, very clear Friday low, right at $335 per share. Now here into today's open, you saw us sort of trading slowly back under that level, right? We saw a very clear sort of move higher, but a fail at $335 per share. That, my friends, is a break and retest rejection, right? We are turning Friday's lows into new highs. So I knew coming into today, hey, if Tesla rejects that 335, there could be some very nice action either on a short at 335 or a short under this low at 325, right? So we can see 325, 325. If we were to break and retest that level, that could really flow the downside. Now, another thing that came into this analysis, which I want to show you really quickly, is back here on the daily chart. Actually, you can look at it on the 4-hour as well. So when I was looking at the 4-hour this morning with the group, we noticed that that 365 level is really rejecting and that we're starting to see a break and retest on the 4-hour, right? A larger term break and retest rejection. We had a previous high here that we broke below. We've came back and retested it over last week into this week, and we're starting to see that curl back lower, right? And we really don't see much support, in my opinion, until that 270 low here. So on the larger term, I knew we were in a bearish structure. We were turning 365 into a very clear rejection point, and we started to see that curl back over. On the short term, I was looking at that 335. You guys can see right here, I was looking at that 335 break and retest of Friday lows right there, and I knew if we would give up this low from the previous day, there could be some action to the downside. And so let me now go into the 2-minute chart and show you how this played out early morning. 325, don't forget that level. What was 325? That was yesterday's lows and the pre-market low, right? So now let's go ahead and zoom into today's action and take a look at what this showed. I'm going to go ahead and put on the highlight extended hours. And you can see today, guys, we opened the market, okay? First candle, a breaker of yesterday's lows at 325. The next two candles, push back higher, nasty rejection, 325. And when I saw this candle right here on a break and retest rejection of 325, I knew that I could enter my shorts there, stop loss over 325, maybe stop loss over that candle high, and see if Tesla could start to play out that larger term picture. Now, once Tesla started trending, I did use that cloud that we were talking about, the EMA clouds. I did go ahead and have that on my charts. I'm going to go ahead and take off VWAP, and I'm going to take that off. I was keeping that cloud on my charts, and you can see how that really kept this stock lower, right? Once that rejection came in right there, right at our 325 retest, once I entered that, we just started to see that EMA, that 9 EMA, just keep Tesla down all day into that very major 300 demand down below, right here, right? Once we hit that demand low, we started to go sideways and consolidate. But all morning, we had that strong trend on the market. We got that break and retest rejection of 325, which is where I entered, and we just rode this baby lower. Now, I could have done better, which you guys will see in TradeZella and on E-Trade. I could have done better to hold this trade out longer. Again, I want to be fully open. I am trading with very large size, and I am getting used to it. I'm still not a master of trading 6-figure positions, okay? This is something I've been getting used to, working on, and challenging myself to do. So there was a point in this trade where I was like, you know what? Let me go ahead and start wrapping this thing up because, you know, you get a little bit uncomfortable at times, especially when you're trading that large of size. And I didn't want to give back the profits that I had over some kind of random Tesla pop. I was concerned about that during the trade, which you can clearly see just never happened, right? So the trade idea came off the 4-hour, the break and retest of that larger term picture, but then also the short-term time frame, the 225 previous day low and pre-market low. I saw a very clear, you can see here on the 2-minute chart, a very clear retest rejection candle right there a bearish wicking candle right off 325, and that's where I went ahead and I executed the position. So guys, pulling up TradeZilla, we can look at the entries, the exits. We'll cross-reference this with E-Trade, and we'll talk about the risk that I had to take to make $73,000, right? What do you have to risk to make this type of money? Well, on these contracts, I got about 31% net ROI. I could have gotten much more, but in the terms of scalping and taking profits, this is typically what I expect. I don't expect to hold something to the very bottom. I don't expect to hold something all day. I'm always going to take profits, create cash flow, and make sure I'm de-risking through the trade, right? I'm not going to just hold a $200,000 position all day. Take some risk off when you get the profits, make it smaller, make that risk smaller over time. This is something I will always do. I don't think back and say, oh, we could have made X amount. So what I did here was I took that entry right around 323.50 per share, risking 325. So let's just call it risking about $2 on the underlying. So risking about $2 on the underlying. If you're risking $2 on an underlying equity, you're typically risking right around $1 on the options contract. A delta of 0.5 is $1 per options or 50 cents per underlying move of $1, right? $2 on the underlying is $1 of risk on the options contract. That's if you're taking a 50 delta, 0.5 delta, which is right around what this contract was trading. It was not in the money. It was close to the money. Let's go ahead and use a 0.5 delta as a way to analyze and estimate the risk. Because unfortunately, with options, you can't get that perfect number, but you can get very close. So what I did here, guys, is you can see my first execution was $8.50. And I did go ahead and put a stop loss of around $7.50. Now, of course, you guys know me. I use mental stops. And so this could have been plus or minus a few points. But generally, it was right around that 325 mark. Options would have been trading around 750, and I would have had to taken about a $25,000 loss if I was wrong on this trade. If Tesla was to get back over 325 and reverse, I would have taken about a $25,000 loss, which is right around accurate in my opinion. It's right around a 12 to 13% loss, which is typically what I see when I have a good entry and I get stopped out for about $1 of underlying risk. So I think that's a very accurate number, give or take, let's say a few $1,000s. So I risked about 25K, and if we go down to my running P&L, very happy. I was never in much drawdown in this trade. You can see right here, I was in at a peak $4,500 worth of drawdown, which is incredible for a $212,000 position. So really good on the entry, tight entry, and the trade just really worked for me instantly. So you guys can see, basically, I entered here at around $8.50. I think the contracts went back down to around $8, sold some into 12, sold some into 14, and that is where I went ahead and ultimately took my position. So it looks like 12, 13. So sold some at 12s, sold some in the 13s, and that is where I ultimately went ahead and took my profits. Now, something I want to go ahead and share with you guys, which is very clear here, and something that I do a lot, and whether you think it's good or not, this is just how I do it. When you see these entries and exits, right, you can see that my chunk of taking off profits is always the first one, right? So right here, you can see I went from 250 to 150 on that instant move right there. So from about $8 a contract to 11, I took 150 contracts off of the 250. Why do I do this? I do this because I think about longevity. I do this because if I can take off a $36,000 win right then and there, just about 10 minutes after my initial entry, if Tesla does by some means reverse, which on the chart, it did not say that. So, you can look back and say, Desi, there was no reason to take it off at that time. And I would agree. The chart never really showed me a reason to think that this was going to reverse back to the upside, using that cloud, using the EMAs, and just using my levels and the overall weakness on the market. There was really never a reason to be worried about a reversal. But we know the market is the market. And we know that there are things, trip mines right around the corner waiting for you to get absolutely smacked at every moment, any moment, right? There is something waiting. There's a trip mine waiting to mess you up. And so the reason I do this is because once I take that core position off, right, for a good win, I can now, one of these, right? I can sit back, I can relax, I took that first win, that core off, and now I'm in runner size, right? Now I'm in runner mode. Runner mode is a big weight off my shoulders. It's a big breath of fresh air. And now it's time to let the trade work, right? So I got my cash flow. And by the way, this is something I've learned from Umar. If you guys watch Umar, this is verbatim from his videos. Like, I can't thank him enough for this concept. This is exactly what he talks about. You start with that core takeoff, right? You start with that core profit, and now you're in runner size, and you can let things go and try to milk the move. Because at this point, with 100 contracts left, right, I still have a good amount of contracts after that first sell, but if things do go wrong, it is very likely that I can't really dig into that initial win too much, right? I will be able to allow something to go against me a little bit because I've locked in that core size, and if that runner does go against me, I can be okay and calm down and relax, right? So that is why I do what I do, right? That is why I scale out of that position to start, a heavy position to start, and then let the runners go. Now, this tactic is why you continue to see this net ROI be less than what you would expect, because the net ROI is taking into account what you put into the position. So is my net ROI actually 34%? Yes, in terms of the money that I put in the trade, but did the contracts and the position run a whole hell of a lot more? Absolutely. But the reason it says 34% is because when I take off that big chunk right there, that's really like the first meat of the move, and it's tough to get that net ROI percent to increase from that point because you have less equity in the position, right? So that was Tesla. That's a little bit about how I managed it and how I traded it, the risk I took. Hopefully that makes sense to you guys. Could have rode this out for a very long time, right? I was a little bit concerned about the 309 level holding, which I will explain to you why, right? My exits weren't just based off of taking profits, but also they're based off of technical levels. And so I had a very big demand here at 309, 310, which I was starting to de-risk off of right here. Was there ever a reason to think that we were going to U-turn? Probably not when I look at this chart in hindsight, but was that a key demand that I was sort of concerned about being short into? Yeah, it was. And so that's sort of what I decided to do, was just go ahead and lock up that win right here from 325 to 310. This was the meat of my move right here, right? That is where I took about $70,000 on Tesla today. So guys, just real quick, cross-referencing these entries, you guys can see right here, 937 on E-Trade, 937, 250 contracts at 850. Some scale outs, the first one 950, you guys can see right there, 950, 1095, 150 contracts, scale outs all across the board, scale outs, scale outs, scale outs. That is everything you saw right here. And then a little late day mess around trade that I lost about $200 on. So that was the core right there. That matches up with my E-Trade, and you guys can see that today's trading gain was about 87K, and year to date we are now up 200,000. So really nice, awesome trade today on Tesla. But now I want to go ahead and talk about Palantir, because this was an equally as sexy trade yesterday that I did have to sit through some drawdown, and I think will be a really good example of how I took this trade and the type of strategy that I was using to look for it. All right, guys, so here is Palantir. You can see I made about $61,000 on this trade. I went ahead and took about 37%, and it was about a $162,000 position, risking about the same amount, about $25,000 to $30,000 on this trade. Now, you can see my stop loss on the contracts was about $3. I went ahead and I entered first at around $350, added at $4, added at $255, added about at $4, and added again at $450. So I was sort of averaging into this trade. You can see right up here into these highs, and this was very close to stopping me out. My total risk was just around that $27,000, $30,000 risk, and you can see I went into about $27,000 worth of drawdown. Now, why did I go into that drawdown? Well, I was giving Palantir a very clear 100 level of supply to see if it would stay below. So if we go into the charts, let's go ahead and pull up Palantir from yesterday. This was a break. Again, the same strategy, guys. I want you to make sure you pay attention to this. Don't get flustered by the numbers. Pay attention to the strategy, because it is literally the exact same thing as Tesla. There is No difference to Tesla's trade and Palantir's trade today. So let me go ahead and zoom in on this. Here on Palantir, you guys can see on Friday, we had a low of $100. On Monday, we had a pre-market that broke below the $100 low from Friday. So what do we look for? We look for a retest of the previous lows, and we use that as our rejection point, right? And so coming into the day, I was focused on whether Palantir could reject that $100 level, and I could look for a break and retest rejection below that level. So right here, we had $100 previous day lows. We had a break. We had a pop, and I started to average into shorts on that pop, giving this a stop loss of $100, right? I figured as long as Palantir stayed below the previous day lows, I could look to short any pop in the morning. So we got a pop. I started to enter into that pop, looking for that rejection of $100. That was pretty much the trade game plan. Now, I also added to this position as we failed under the low a day, which was around $95. So let me go ahead and show you. My chart was a little different at that time. It was right here at 95. And the other thing I saw here, which I will go to the 2-minute chart, which is very similar to that Tesla trade, where I added to this position actually, was right here. You guys can see, not only did we get a break and retest of the previous day lows here at 100, we also got a break and retest of the intraday low at 95, right? So look at this right here. Let's zoom in more. We can see failure here. I started to take my entries. Right here, we broke the low of day, right there on that candle. We had a retest candle, and we saw the rejection come in under that previous low, which is where I went ahead and added again. So I added here, I added here. Those are my adds on Palantir. Now, my target on this trade was ultimately the 85 gap fill, which is where we did end up moving into. So let me go ahead and show you really quick what this larger trade idea sort of was planning to be. I was looking to take this back down to the gap fill. The gap fill being 85. You can see right here, we just filled that gap today. So I figured, hey, we might be able to get this gap fill right here. Right? We might be able to get the gap fill under that 100 rejection, under that 95 level. We might be able to get that gap fill. And we did drive this down pretty good, but we started to get some demand stepping up near that $90 level. And if I pull back up TradeZella, you can see that I was scaling out into the 92s and lower 90s and just taking that W. So my initial planned R multiple, you can see, was down to 85, which would have netted me about $200,000, which would have been great. But I did go ahead and take my profits off a little bit early. You can see I was averaging out into the 480s, $5 right there, around 9:50, 10 o'clock. Again, cross-referencing this with E-Trade, you guys can see my entries right here. These were all my buys, 100, 100, 100, 100, and 50. You can see right there my buys matching up with these right here. And then my exits right here, 300, and then sort of scaling down as we go. And you can see, guys, I did the same exact thing as Tesla. The first sell was a big core position to de-risk, to be able to sit back and relax and let the runners ride out and try to milk the meat of the move. Once again, I want to put across that I was able to make about $100,000, $120,000 on these two trades over the last 2 days, but guess what? I also risked about $50,000. So make sure you are realistic with this, right? Make sure you understand if you want to be at this level of trading. And I hope that I am a person that you can watch and enjoy watching these types of trades. And guys, trust me, okay? I need you to understand, I'm losing hair by the moment, okay? This receding hairline is going back every single day. And I'm taking monster risks, and I'm trusting in my analysis. I'm trusting in my abilities. And at the end of the day, guys, I want to just sort of heart-to-heart with you here. I'm enjoying every second of this. This is something that not everyone in the world is able to do. This is not something that everyone in the world in their lifetime will be able to say. This is something that I take very, very seriously, and I'm enjoying it. I try to be as open and transparent with you guys about all this. It's been fun. I hope you guys are enjoying watching this. If you guys watched me 5 years ago, you probably remember me taking $1,000 positions and being, panicked on $1,000 positions. You probably remember me taking $500 winning days. And man, to look back at that and to see where we're at today is quite incredible. I hope that you guys are enjoying the ride. I hope you enjoy watching it. I hope I'm inspiring someone out there that this is possible, but I also want to be open about the risk that I'm taking. This is by no means some type of small risk, sort of non-stressful environment. This is some serious stuff here. These are some serious positions, and I want to show you that it's possible, right? I am no different than anyone else out there. I've just dedicated my life to this. I do this seriously. Every day of my life is all about stocks. It's all about trading. I put a lot of work into it, and you can do it too, man. You can do it too. It's just going to take a lot. It's going to take a lot of years of experience and learning from mistakes and a lot of bad trades, a lot of good trades, and eventually you will get it. But be realistic about the size that you take, and are you ready to take that size? That's something that I wanted to get across. But not only that, I don't want to discourage you, because the trades that you saw me take, both Tesla and Palantir, are simple technical setups that hundreds of people in the Discord today took and made money. Maybe they didn't make the same amount of money as me, but I can guarantee you a lot of them probably made a larger percentage point as me. There's probably many of you watching this video that nailed that Tesla short and made 100, 200, 50%, right? More percent than me. So it is possible to do exactly what I'm doing. It is just a different size, and all the difference is becoming comfortable at that equity mark. That's the only difference. The trade is the same. How much equity you put into it is the difference, and over time, you can be more comfortable taking that size if you set up the right rules and the right habits and the right way of trading in your early days. You can build upon that proper foundation to size up and make larger positions, right? Very, very key. All right, guys, so that's going to be it for today's video. That was Tesla. That was Palantir. Big wins, over 6 figures of wins over the last 2 days to the downside, which is not something I've traded very often, but we finally got some downside. On the year, up over 200K, had some speed bumps along the way. You guys know it's NVIDIA, but we're rocking, man. 200K over the first 2 months. We're on pace for that $1 million year. Let's see if we can do it. Maybe I'll have to, throttle back a few times if the markets don't look proper, but let's continue to just do what we do every day and continue to profit and continue to learn. Press that like button, subscribe to the channel. I love you all. We're almost to that 100K subscriber mark. With your guys' help, we can get there. I do really appreciate that. I will see you guys in the next one. Peace out.